Hey everybody, welcome to the morning market briefing. It's Tuesday, April 14th, 2026. Hope you're doing well out there. Ben Nye coming in hot here. We're going to give him a minute to catch his breath. Tom, how we doing?
Feeling good. Feeling like it's another banner day for the boys and another just absolutely teeth-gnashing day for the haters and losers.
The haters and losers.
Of which there are many.
They're going to be beside themselves here in a minute. But Lopen got a dead chipmunk in the pool this morning.
Oh, no.
Yep. People.
Was it Alvin Simon or Theodore?
People are saying he was chipwrecked.
Oh.
So,
this is...
I think we need to keep a tally. First dead rodent in the pool.
I have to look up the name of it, but the other day we're doing a little witch doctor at the house on Spotify. Big on got to listen to songs, got to have dance parties. And after
Walla
the
Walla
Chipmunks...
Bing Bang?
Yeah, after the... there's another like 1960s chipmunk song that came up. It's called like has something to do with bananas.
Oh,
but
yes.
it is
Yeah.
Man, it is a problematic
Yeah,
song. It is absolutely wild because it came up and I was like, this is
Japanese banana?
Japanese banana.
Yeah. Oh, it's
I was like, here we go.
Martin, who's 7, very into the Chipmunks and continually shocked because they made a newer series of movies.
Starring David Cross,
Yep.
Roswell legend.
And continually shocked that songs like Bad Romance, which he recognizes as a hit single from the Chipmunks and the Chipettes, is a real song by Lady Gaga.
Oh, yeah. I've not seen any of the new ones, but
We
got to just go ahead and shelve the old ones.
Yeah.
Very
Yeah.
tough.
Yeah, on your own time, maybe YouTube Japanese banana.
Yeah, I was like, I've never heard this before, and I don't know that.
Oh, yeah. I'm familiar with that one. Let's jump in with PPI today. We're looking for a headline reading of 4.6%. Last reading was 3.4. That would imply a month-over-month increase of 1.1. X food and energy looking for a 4.1, which would imply a month-over-month increase of 0.4. What are we seeing, fellas?
So let's start with the month over month. We came in at less than half the expectation at 0.5%. So all of the talk that this is going to be spiraling inflation, sure, it was up. It was up less than last month. But wait, they actually revised last month down as well. So the shocking PPI month over month of 0.7 from last month is now 0.5, and this one that was supposed to be 1.1 is also 0.5. X food and energy, the expectation was 40 bips. We came in at 0.1, and then wait for it. Last month was revised down from 0.5 to 0.3. And then on the headline number, which was supposed to just be spiraling out of control at 4.6, came in at 4. So under expectations there, and then the core came in at 3.8, about 30 basis points under the expectation of 4.1. But wait, last month, which was 3.9, also revised down. So I'm beginning to think that this might be transitory, guys. I think we might be seeing some transitory inflation, and perhaps
no inflation at all.
The news media and the people who were saying that oil was going to go to $200 were perhaps victims of watching speculation play out, which we've now seen unwind pretty quickly. I mean, I haven't looked at oil prices since I got up this morning, but I was looking at around $96. So we've still got about 104% to go before we get to 200. So strap in.
Why does this happen every end of March, beginning of April?
And
it happened during COVID, too. And I had a professor at Emory saying to me that we're going to have a 35% contraction in GDP, and this is going to make the Great Depression look like child's play during COVID.
That was not just a professor saying that. I mean, there were major banks saying that. And this is, if you rewind maybe 3 weeks ago, we talked about the Federal Reserve's continued inability to avoid surprise. They're always just shocked by these things, and they always interpret them as systemic risks. This is the same kind of thing here. And right now we are chastising the media, the haters and losers, the University of Michigan, and others. But the reality is the Federal Reserve has acted the same way.
Yeah.
Oh, we didn't see this war coming, therefore we will assume that inflation is going to 5.
I don't understand. So Jay Powell said this, and he needs to be intellectually honest. He said this a couple weeks ago.
I think he's bad at both of those components.
And I said this on a presentation I gave yesterday.
I think he might actually be honest, but I think his intellect might not be fine
Yeah,
to.
But he said that buying bonds doesn't create inflation. And yet he wants to take credit for when inflation was 7.9%. He dramatically withdrew money from the M2 money supply. And shortly thereafter, inflation peaked and began to come down.
Yeah, then if quantitative tightening, which is the selling of bonds, is going to push inflation down, then what would the buying of bonds do?
I don't think we have any cases available for an equal and opposite reaction. I don't think those exist anywhere.
I mean, I think the thing is, like, everyone wanted this to happen. They wanted it to be a doomsday scenario. They wanted the war in Iran to be the COVID part 2 for Donald Trump, the end of his power. But what's ultimately happened is, guess what? All of the losses on the equity market from the war in Iran are gone. All of the bond losses.
We're flat for the year, right?
Iran are functionally gone. Yeah, I mean, the market is flat for the year. We're right back to a 430 on the 10-year. 30 years at a 489, and we got almost up to 5. The 2 years a little bit elevated, but that more has to do with the dumbness of the Federal Reserve saying that they're not going to cut interest rates, and the idea that suddenly we're going to have runaway inflation because spikes in oil prices cause transitory inflation. Trillions and trillions of dollars of money printing cause non-transitory inflation. So, like, all of this has happened, and we might top out somewhere in the low 3s on inflation. All of this has happened, this world-ending event. And yet they fail to realize that all of that money printing is what caused it the first time. Like, where is the Ayatollah Khomeini price hike? Like, where is that? Like, we see it. Sure, the gas pumps are up, but now we're at $96 a barrel on oil and falling. So in a couple weeks, we'll be right back to where we were. And guess what? We didn't even get as high as we did when oil prices were. I mean, it was basically the average price from 2020 to 2022 was significantly higher than it is right now. And we all survived. But the difference is, if you go by, and I listen, I watch eggs. We crush eggs in our house. I'm a big proponent of eggs. The Happy Eggs 18-pack at Publix by us is $8.99. At one point, it was $16.99. So now we're back to what I would argue is one of the best bang for your buck in terms of protein consumption divided by price. Beef prices, unfortunately, not come down as much, but like that's a major input into my personal CPI is how much eggs cost, and those are way down, and that was the sticking point. But nobody talks about that anymore, and it's definitely offset gas. I live 1.1 miles from the office. I've had a car now for 2.5 years. I've got 11,000 miles on it, and I went to Augusta last week. So I mean, it's one of those things where it's like, where's it going to come from? Where's it going to come from? Where it's actually going to come from is by the Fed making a mistake and thinking that they need to start quantitative easing and printing money or handing out stimulus checks to offset the gas prices.
And I think when we're talking about PPI, it's useful to consider that, and I gave this in the presentation too, as a percentage of what we produce in the U.S., energy is actually relatively low compared to, any other country. China, obviously.
I mean, Europe.
But Europe is 35%, and I think in the United States is about 9% because we have value-added services. And if you look at the inflation in services, stand by, I just had this, is guess what inflation in final demand services is on a month-over-month basis?
Down.
It's 0.0.
I was going to guess down 0.2. But 0, yeah, it's 0. So, sure, we're seeing goods go up. That's a function of oil prices. Services are not affected by that. And we're still not, we have to mention it every call would be, this wouldn't be the morning market briefing if we didn't say, housing is not advancing at 3.2% as reported last week. So
it's amazing, and you look at we did not harp on this, although just the timing of the release is never great. But the University of Michigan has inflation expectation at 4.8. They do break this down by political party. I don't have it readily available, but that means one party is probably at 8, and one is at 2.
Yeah, I'll let you guess.
It's really interesting to see how quickly this is getting baked out of the cake.
And this happens, and now, and one of the things we're about to go into a investment committee meeting right after this call, and one of the things that we're going to be talking about is, and I said to everybody, bring this insight. Where are we going to be? What is the world going to look like in June?
It's going to be hot.
It's going to be hot.
Because
hot boy summer is
mark
on.
your calendars. June is going to be hot.
Because we're probably not going to be talking about Jay Powell, because Kevin Warsh's will begin his Senate journey tomorrow, next week, a week from today in the Senate.
That should go through. It'll be interesting to watch. I do wonder on the worst thing. I am legitimately unsure of how that plays out in terms of what his role really looks like. I don't know if you have more clarity, Tom.
I'm not certain. I'm sure he'll get through. It may be crazy if he didn't. I think that he's going to have a little bit more control. I mean, Jay Powell's obviously exerted he's basically run the Fed by himself for a long time, which makes me think that Warsh can also run it by himself, because the people who are involved until very recently were doing nothing except for being like, what does Jay think? Okay, we'll just not cut rates, or we'll increase them once when we should raise them 5%, see what happens.
I think it's going to look like Jay Powell right now, like when he speaks to the reporters, it's like he's the highly paid consultant who comes in and everyone's just trying to, like, eager to hear the genius of Jay Powell. And I think Kevin Warsh is going to be a little bit more the professorial type and basically challenge some of the questions and the premises and the questions. I'm interested to see how he goes about doing that, because I think he's going to have to dismantle some of the intellectual edifices that exist in that reporting room.
I mean, I think if you think that Jay Powell is going to automatically dissent to whatever Kevin Warsh says, I actually don't think that's true. I think that what has happened is
he's going to see which way the wind's blowing.
Jay Powell has gone out there every year since he's been in there, and he's basically gotten no pushback. So whatever he thinks is happening, right or wrong, has really kind of just gotten rubber stamped through until recently when you started seeing dissents, because it became pretty evident that he was not correct. And then there was also some political moves by the likes of Mickey Bowman, who, while correct, is also jockeying to be visible to Trump and potentially jockeying for that job. But I think that if Warsh comes in and makes reasoned arguments, he's going to get Jay Powell on his side, because I think at the end of the day, Jay Powell is a smart and reasonable man. I think that he just hasn't had a lot of support from the rest of the board, and he's been wrong. Now, I think that Lisa Cook will dissent no matter what. But like a lot of the dummies who weren't doing anything except for clipping a paycheck and showing up to sign on, like Mary Daly, those people are gone. You may remember her as being the chief of oversight for Silicon Valley Bank as a function of being the San Francisco Fed president.
She nailed it.
Yeah, nailed it, obviously. But I think that a lot of the rubber stampers are gone. I think that there are going to be some hardliners that are going to not want to help Trump economically, and I think there are going to be some that are going to be hardline to help him. And I think that Kevin Warsh is ultimately a more seasoned economic player, and so I think he's going to do well. And I think that if he's having lunch regularly with Scott Bessent, then he's going to get good intel on what to do. Whereas he's not going to be maybe as resistant as Jay Powell is, because Jay Powell has had his pants pulled down many times by the markets and by
himself.
By himself, yeah. I mean, he just
not to go full Swalwell on it.
And it's hard. It's hard when you've been ritualistically embarrassed in the media repeatedly for being wrong. Whether it's not you look very small and scared with a hard hat on, or you say that the jobs reports are awesome, only to have that pulled out from under you the following day, or you say inflation is transitory when it clearly was not. I mean, you pick. He's stumbled many times, and I think he's sort of turtled in the sense that he wants to be right, and he's gonna hold on. But I think that if he is reasoned into a position where he looks like an active participant on the Fed and can do something positive, I think he will do that. I don't think he's a bad person. I think he's just not. He wasn't the right guy for the job, and I think he got overwhelmed by it big time over the last 5 years and has been trying to get it back. And then he's also been publicly shamed. So that never goes well for people.
No.
But shame is a powerful motivator, and whatever is motivating him now, I'm not quite sure.
The Iran war, potentially more conversations coming as soon as next week. Certainly a lot of news coming out in the last, I feel like 24 hours. Much, I feel, unsubstantiated, and sources say, and he said, she said, they said. But latest reporting I've seen, Ben, is that Iran's willing to take a 5-year pause on uranium enrichment, U.S. looking for 20. But seems like potentially the ceasefire may hold in the sense that there are still ongoing negotiations.
Yeah, which was kind of what we said yesterday, too. I think the Iranian proposal is not much different than what it was in February. So I'm sure that Trump will want to exact more concessions than that. But I do think that, I think that first talk, the big takeaway for me was that it was never going to be the last talk. And there was never going to be anything decided at those discussions. So, I mean, they're racking up those frequent flyer miles, though. Yeah. I mean, J.D. Vance has Hillary Clinton in his sights in terms of catching up to her and all the miles that he's logging.
Yeah, might need an extra security detail for that.
Interesting breakdown. I was just looking through some of the stats here. So half of the PPI increase was due to the oil prices. And in fact, we talked about this last PPI. Fresh and dry vegetables fell 10.7%.
Foodstuffs
fallen.
Fresh and dry vegetables, the best kinds.
Ben, lots going on, obviously. We're seeing some divergence in how just massive corporations are kind of getting through this fog relative to smaller businesses. What are you seeing thematically?
Yeah, I'm seeing that big companies are just dancing all the way to their AI party and enjoying good earnings and looking through a lot of this disruption. And I'm seeing small businesses get completely whipsawed. So on the big business side, I mean, Amazon's looking to acquire Global Star. That's a satellite company, so they'll be able to compete with SpaceX. And so, I mean, Jeff Bezos has this Blue Origin that competes with SpaceX now, but then they'll have Global Star, which competes with Starlink. Amazon already has the Delta contract. They just won that so Amazon does its satellites a little bit different than Starlink. So they are able to track moving objects a little bit better. So Starlink has a little bit more of a dense network, but has lower throughput. So it's really good if you're in extremely low populated areas and you're not moving. So if you're fly fishing out in the middle of Colorado, for example, or if you're in Africa. But for a moving object that's going 550 miles an hour, like a plane, that's where Global Star and Amazon will do well. And then, so Amazon looking to make an acquisition there. And then United, that CEO, Scott Kirby, floated a deal to senior government officials to potentially purchase American Air. It's incredibly early in those negotiations, and it comes right after the whole initially Frontier and Spirit were going to merge, and then JetBlue came over the top and tried to buy Spirit, and neither of those went through, and then Spirit went bankrupt. But new administration, it'll be interesting to see if United actually pursues this. I think that this would probably not go through due to antitrust, even under the Trump administration, but that's my opinion. But it's worth noting that someone's even trying to do this. And, if United's trying to merge with American, then surely Alaska might be trying to merge with JetBlue. But American Airline mergers have historically not gone so well.
No.
Yeah, I mean, American and U.S. Air
really
are still
all
trying to.
Yeah.
I mean, the reason Southwest has been so good historically had been because they just operated their own airline and did a fine job on it. BlackRock was really probably the king of this morning's earnings reports. They said that not only were earnings solid, but they had massive net inflows, including in private markets. I thought the expectation for private market inflows was way too high given the headlines that we were seeing, but boy, was I wrong. So BlackRock performing exceptionally well. And then JP Morgan doing well. Jamie Dimon talking a lot about the same things that he talked about in his investor letter. What's really interesting here is debit and credit card volume accelerated for both JP Morgan and Wells Fargo, and credit card delinquency rates were down. This is not an economy that's doing poorly, and yet small businesses are really struggling, and they're struggling with the uncertainty. The NFIB Small Business Optimism Index came out. That was somewhat weaker. But what was really interesting is all the quotes from respondents. They're saying labor's expensive. They're saying the Michigan minimum wage increase is hitting them. Health insurance, business is slow. Biggest obstacles are taxes and insurance. Biggest fear is the government. Government regulations are a hindrance. I fear AI will take some of my customers' jobs was an interesting one. Cannot compete with online retailers like Amazon and Walmart. Really seems like small businesses are really getting hit, and really more so due to the uncertainty than anything else. But just to kind of put a bow on this call, I love, Hicks, if you could pull up the price plans. And this kind of ties it all together because small businesses are the ones who are just like you and me. I mean, we're all seeing the headlines. We're all seeing the news headlines. And we're seeing what's going on in the Middle East. And we're all concerned about inflation. And yet, when you look at small businesses, the odds of them increasing prices is about as low as it's been really since as far as this data goes back. So net 24% price plan to raise prices over the next 3 months. And you look back at that chart and you cannot find a number lower, 24% or below. And this goes back to the beginning of 2021.
It's wild.
So I look at this and I look at the producer price index and I look at the consumer price index and I just say, I don't see where the inflation is. And I think Kevin Warsh is going to think very similarly to me, because that's how he's historically been. These are indicators that he has historically looked at. And I think he's going to cut rates. And I think that right now the market's pricing in how many rate cuts this year, Tom?
Not one full rate cut.
Like half?
Yeah.
0.6? And
Would
I
you
think
be closer to 3 or 2, Tom?
I'd be closer to 2, but I think the 3 is definitely in play. Especially because there was a stupid Bloomberg article that came out this morning that said that if the jobs market stays strong, that the yield curve is going to invert, which you'd be hard pressed for that to happen.
Yeah.
The 10-year would have to fall like a full
Massively.
100 basis points.
How do they come up with that? I mean, even that.
And also it would be hard pressed for the job market to remain strong, in my opinion.
After PPI, we're now at 0.33 is the high point for number of cuts. I would still say 2.
So what they're saying, Tom, this is what they're saying, is that if the jobs market remains strong, the Fed is going to be obstinate in not cutting rates. So when it's a market-driven rate, the market's going to drive down rates at the long end, but when it's a Fed-manipulated rate, it's not going to come down.
Correct.
That's what they're saying. They're saying that
The Fed's not going to do anything.
The Fed's not going to do anything because they're stubborn.
Correct.
And wrong.
Yes.
That's
And the jobs
not
market,
an indictment of the incoming Fed.
and the jobs market, I would argue, is not strong.
Yeah.
It's overstated by at least 1%, I would say, on the unemployment rate, if I had to guess. I think it's 6. So call it 1.6%. Lower than, or higher than actually
What's reported.
Yeah.
All right. We'll wrap it up there. You guys have a great day.
Hey, you have a great day.
Tomorrow is Tomorrow Day Eve, so look forward to it. Talk to you soon.